Good evening and welcome to the Australian Stock Market Show. Now last week the Australian stock market changed direction to rise strongly. But is this rise set to last, or is it just a suckers rally? We'll take a look at the All Ordinaries Index tonight and give you our thoughts. Our main topic for tonight's show, we take a look at the best technology stocks and share with you the ones to watch and possibly the ones to buy. First up tonight, we'll share our hot stock tip for the week. So sit back and relax. Tonight will be jam-packed as we answer emails, take your phone calls and give you the answers to some of the most important questions around the stock market. Hello and welcome to the Australian Stock Market Show. Now some of the stocks we're going to cover include the Reject Shop, Domino's, Core Lithium, Carsales, REA Group, Seek and more. I'm Dale Gillham, your host for tonight, and joining me is Janine Cox, and we're Australia's most trusted stock market educators.
Hi everyone, what a great lineup of stocks that we have tonight, and for our main topic we get into a hot tech sector. No, I'm tongue-tied. What's going on? Must be the Melbourne Cup. We haven't even been drinking, which often generates double-digit growth. So let's take a look at the best stocks. Stay tuned as we get into that and more very soon. But first up, we need to get into this week's hot stock tip.
Well, I'm glad we got to the hot stock tip. So we're going to bring up EML payments, and I've got to bring that up on the screen right here. We're going to talk about EML payments because I like this one. I almost brought it up last week, but it is looking a little bit better at the moment. So you can see there, they're in financial services. They're only $1.15. No dividend yield, so you wouldn't be buying it for any income stream, but 430 million in their market cap. And if we scroll down a little bit on here, they're formerly eMerchants Limited, so they're a global payments company that operates in Australia, the UK, Europe and the US, and their customers include major banks, so they're pretty good and diversified across all of that, but they are looking quite nicely. And you can see here some of the different performances had up currently 1 week performance up 5.5%, and year to date up 82.54%.
Which sounds impressive, doesn't it? But then when you look at the chart... it's not as impressive. So let's go and have a look at the chart. You'd also think, given that their major customers are big financial institutions, that would be helping them, their bottom line as well. But look at the fall.
Yeah, look at the fall. I'll bring up the monthly chart at the moment, and you can see that huge fall from that all-time high at $5.89 back there in April 2021, and it fell all the way down here to 40 cents in October 2022. So in the last 12 months, they've been moving up quite nicely. And generally what we see when you said such a big fall, often you'll see this little dead cat bounce and then moving up. I still think there's got a lot more movement because it's dropped below this major support level, but it sprung right up. I think this is the next resistance level there at $1.47, and there's a very strong resistance at $2.94. And if we use
but it could head back up to that black dashed line, which you've got there.
Well, even that one, that's 91%. That's its major resistance level right there at 160% growth from where its current price is. But right now it is looking pretty good. But let's have a quick look at the weekly chart. So as I said, I still do like this stock, but it's just really travelling sideways across that resistance level.
So it could just as easily come back down to the angle of that trend though, couldn't it?
Well, it could fall down to this area, but look, the market's, it was really bullish last week. It's a little bit off this week, maybe because of Melbourne Cup. Maybe it'll get going again next week, and we'll talk about that in a minute. But I would wait for it to get above this green line through here and a nice strong close above here. But if it comes back to here, then you might get a slightly lower price.
Better opportunity
to buy it. But it is looking really, really good. I think it's just basing across here because of this strong move up here in September where we saw 44-cent range on a 79-cent stock. So pretty impressive move up. I think it just got overheated a little bit, and it's just stalling a little bit before its next move up.
I'd like to see it pull back a little bit.
Similar to that, we got a big move up, sideways, big move up, sideways, big move up, sideways. I think a bit more. What do you reckon?
Look, I think you've picked a good one. This one was yours, and I think you've picked a good one. However, I'd like to see it come back just a little bit more, given the strength of that line level that you've just shown us.
Oh, look, if it go through that line, I'm in. I'm in. I'm a bit more aggressive than you. I don't want to see it come all the way down here, even though you could get it down around 90 cents or $1 instead of $1.20 or $1.30. Look, I think I'd be looking at this for a portfolio. It is something that's going to be a little bit more erratic. It's going to be a little...
So it's not for everyone?
It's not for everyone. And it's not going to be a long-term play either, because you can look at this whole price action right through here. It is quite volatile. So know what you're doing. Have some good rules in it. Make sure you set a stop loss.
Great.
That's it for me.
All right, that's it for our weekly hot stock tip. Shortly, we'll get into the main topic for the night. But before we do, right now, it is your opportunity to get involved in the show and have your questions answered. Remember, we prioritise phone callers, so call now on 03 9290 9988. That's 03 9290 9988. Or you can text your question to the number on your screen.
Now remember, the first caller into the show right now gets a free copy of my book, Accelerate Your Wealth. So pick up your phone and dial 03 9290 9988 right now. Now while you do that, tonight is the first Tuesday in the month, which means we take a look at the All Ordinaries Index. So let's get into the charts, Janine, and your take on the All Ords.
All right, now I'm just looking at the long-term picture at the moment, and we're still seeing there's really no change overall. So it's in that sideways move, but I just thought it'd be great to go back and have a look in time, right back to the 80s, where the stock market had a major boom, and just to get a feel for the sorts of degrees of the booms that we can expect on our market. Now, if you'll help me out with that one.
I know the 80s was a good time for me.
Here we go. It's about 400% there in terms of the gains. If we just look at what happened prior to the GFC, you can see from this low here, that is a nice rise, 158% roughly. And if we move forward, I mean, what can we expect from the next boom? Is it that sort of order that we saw in the GFC, do you think?
Oh, look, I think we will.
From the COVID low, though, it went up, say, 180% roughly.
No, that's right? 79. Is that 79%?
79. Sorry, 80% from that. So if we were to say, okay, somewhere
Not that
between
anybody can see that.
no, somewhere between 160% and what did we say before?
That was 400%.
Let's just see where we might end up. The mind boggles, doesn't it, as to think about where the market could be. But you were suggesting that there's a certain level overhead that could be important for the market going forward. But if we go to about 180, that takes the market well above
12,000 points.
12,000 points, which would be amazing to see, but not impossible, especially when you consider, if you go back in time and have a look at what our market did back around the 80s, we had this high here, obviously 87, and then it made a new high, but only slightly, still trying to challenge the market, that high in 94, and really hadn't broke through properly until 1997. So that took a whole decade before it actually got through. And we've got a very similar sort of situation here before the market broke through that point. And we did see a pullback into the 90s in 95, and there were lots of little pullbacks along the way, but the market sort of just trundled higher. And I think I've said for some time that I thought that this is what we might be doing through this period now. And we're still seeing that sideways move unfold and no real commitment to direction either way. But we know if the longer the market moves sideways, the more it's going to increase the probability of this big boom. It's like holding an elastic band and then letting it go, isn't it?
So what do you think for the next year?
Well, I think if they have a pause on interest rates and they call 2023 the end of it, because if you think back 2 years ago, there was talk that things wouldn't really recover until 2024. They wouldn't get back to normal. And we've seen a lot of things not back to normal. And the housing supply is in short supply, that's being held back, and increases in interest rates are only going to make that tighter. So therefore, at some point, that elastic band that's being held has got to be let go. So you'd think that the RBA will just give it a breather for at least 6 months from here, just to see how that...
I mean, I know I said a few months back that we probably may be up for 1, maybe 2 more rate rises. I just didn't think they'd do it this month.
Well, they're obviously trying to hold things back for the retail trading period.
Well, I don't know whether they're trying to do that or not, but at the moment, I'm the market goes up 1 week, down the next week, up a week, 1 week, down the next week. So we want some direction on this market, and so you're saying that's going to come really soon.
Well, I'm just suggesting that right now, because there's been that additional interest rate rise, I don't think so. I think we're
yes
staying
or no
sideways.
Would be okay. You know that.
Sideways.
Just yes or no would be fine.
Sideways, I just said.
So, for how long? Everybody's hanging out for this.
How long? Look, At the moment, I'm questioning it. I don't know. It's not clear. But I would say that, look, if you count, we can do a quick count to determine how many bars the market has been trading up and down into this low in June 2022, and then projecting that out. It's due for a turn very soon.
Cool. All right, so there you go. That's the best I've got out of you, isn't it?
All right, that is it for our thoughts on the Australian stock market. We've got lots of emails tonight, partly because the first 3 questions were actually meant for last Tuesday's show, but they were incorrectly sent to our Talking Wealth email address, so they got missed. But that's fine. We will recover them tonight. And remember, emails for this show must go to info@wealthwithin.com.au. Now let's get into our first question.
All right, our first email is from Carol, and Carol says, "Hi there, Dale and Janine. Had a little short-term trade with TRS. I bought when an entry was present at $4.26 in March 2023. I backtested the stock and had an exit plan, and I am pleased to say that I sold my share. I missed an earlier sell signal back in May 2023. As I was on holidays in Bali. My sell should have been $4.30, and then I missed another exit, also another holiday in Bali, but successfully sold yesterday. I found that I had to sell a little lower at $5.21, which was still a nice little profit, but found that there were very few buyers. I can see why you say about market capitalisation and more liquidity. When I further back tested, I found that TRS were in the emerging ASX section, not in the top 300, and lots of buybacks also. My question for this week is is that top 300 and one onwards, new listings? Can you please advise? Great work as always. Cheers, Carol." Well, I'm going to actually take you through to the S&P website, Carol, because that's where you find the answers to looking at stocks in what sectors they're in, and obviously what participants are in those different sectors. So on your screen is the S&P website. So it's just spglobal.com. You can see up there, but if you just typed in Emerging Companies Index, you'd probably be able to find it through Google straight away. So this is the S&P, or Dow Jones S&P indices. This is for the ASX Emerging Companies Index, and you can see here that's the index value at the moment. 1 year returns down 10.27, and if we scroll down, you'll start seeing lots of data through here. So here it explains what the Emerging Companies Index is, but if you want to see the methodology or how they get into that index, then you can click on that fact sheet too and download that. But if you click on the methodology and you let that open, and we download that, we're going to do that. I'm going to click on that one. So download that, and here it comes up, and this tells us the methodology. So you click on here and you go all the way down through, and it'll tell you all about it. So this is the methodology, how it all works, what it all means. So here's your eligibility criteria, and it says they're greater than the 350th and to the 600th on the Australian Stock Exchange. So that's what they are. I'm not going to read all of this, but I think I'll leave that up to you. Do you want to add anything on to that?
I would have actually liked to look at the stock chart for her, because I think that where she exited was actually okay, regardless. And so what that shows me is that you could say that she's lucky, right? Mm-hmm. But I actually think it's more than that. I think, you know, she was in a stock that was actually trending up, and it was doing really well. And when you're in a stock that's actually trending up and you've got the direction right, sometimes a little bit of slippage to the downside is not the end of the world. No, it just means that you might, if you get out a week later or whatever, because for whatever reason you couldn't. Yeah. But I mean, where she got out, I think, was quite a legitimate place to do it. And I think, you know, she should. Do you want to
show us on the chart?
Should be happy with that. But yeah, I've got the chart there, but in saying that, because you can see that she's got out somewhere, I think she said 521.
Something like that.
Which the close of that, the open of that bar was 518.
I'd be more interested in the rule she used.
So yes, she's looked to get out at that point, but I can see a rule there that she could have used. But look, in saying that, looking at the long-term direction of this stock, I find this quite interesting, and I'm wondering what an additional interest rate change is going to mean for the reject shop, and whether, you know, because we know that when things are tighter, people will go to those shops,
So you think more people will use the
for
reject
Christmas
shop?
time, particularly coming up? Yeah, they can be really popular in times where
I can't remember the last time I
people are
went in a reject
concerned
shop.
about that. But I'm not talking about you. All right. So so when we're looking at the pattern, I can see these highs getting lower, and it's sort of coming to a bit of an apex there. So it may soon break out of that shape. So she may actually get another opportunity to trade it soon. And I wish her all the best with that.
Okay.
Pardon?
You had your charting fixed?
It's all good.
Okay, cool.
All right then. We've got a text, and this is exciting. It's from another lady, Paula. The code is RED, I believe. Good evening. I would appreciate your thoughts on RED stock. Bought at 17.5 cents at the start of August 2023. Owning the stock for only a few months. Will it encounter a 50% tax on the profit if I sell within 12 months? Thank you, Paula. Okay, yes, that's the answer, plain and simple. The best place to go if you want to understand anything to do with tax is to go right to the source, and that is the ATO website, the Australian Tax Office website, and you can do some searches on their website. They've got some great facilities now. It's really, really helpful for investors.
Yeah, because after 12 months you've got
the exemption.
The exemption, yeah. If you do it before 12 months, you don't have the exemption, Paula. So sorry about that. No good news.
In saying that, though, you don't want to continue to hold a stock that's been falling.
Yeah, but I mean, if she's made a lot of profit, that's to me. The more money I pay the tax man, the better, because that means I made more money. So it's more about what you get in your pocket, not what you're paying the tax man. I'd rather go to the tax man with a bottle of champagne and some flowers and say thank you very much because I've made this much money. Because they also allow you to you claim a lot of stuff on your tax if you're a trader too.
Sure.
Now, obviously, we're talking about capital gains tax here. If you're technically termed a trader from the tax position, whole different story again. But anyway, we won't get into that.
Good idea. Now it's time that we get into our next question, which is from Derek. Hi team, love your show as always. Have a question about Lindsay Australia code LAU, transport company moving food supplies around Australia with good balance sheet and P&L. Also low PE of 8.9. I thought this kind of business would cope well under recession threat and bought shares for mid to long term investment. Unfortunately, my losses are about 10% already, but I've increased my loss increased my loss sell, I think he's saying, to 15%. So there's a stop loss. Could you tell me your thoughts on LAU? Best regards, Derek. Okay. So look, I like this one. I think it looks really interesting, but at this point it's in a decline.
Well, it is in a decline and it's below a trend line, which means we shouldn't be owning it. But
well, you can draw the uptrend line probably in there somewhere as well.
When did he say he bought it? Do you remember?
No, not exactly. But I mean, if he was in this stock near the high, anywhere near that high, and he's in loss, he's saying he's at a 10% loss now, and it's in a downtrend already.
There's no way to buy it in this whole move, and if you're talking about 10%.
But the question is, do you think that it might find support where it is, just to help him out? It might find support where it is. It's gone through that dollar mark, so it might try to rebound quickly back, which it looks like it has.
Well, currently, this week's bar is not looking super great.
No, it's not, but it'd need to be stronger than that, wouldn't it? We'd need to see a rise up. Look, I'd be a bit concerned if it went back below about 95 cents.
I just think he's bought at the wrong time. He's bought it the wrong way, they bought it the wrong time. And whilst his reasoning of how we think it should be travelling sounds feasible, it's not necessarily reality. We've seen that so many times.
We have, yes.
I wouldn't be in this stock, mate, at all. So what about you?
Well, look, I mean, he's in it and he's in a loss position, but I mean, what do we say about dropping your stop loss?
Well, you should never do that.
Well, that depends what you're talking about, though, because sometimes you've got to weigh up whether, if there are certain levels underneath, you've got your percentage stop losses and then you've got your
correct. But why did he drop his stop loss? Because he was in 10%, but he dropped it to 15, so he didn't get stopped out.
Well, it depends. If his analysis was telling him that was a really strong support level and it could turn around, that's validation of what he's doing.
If it was a guess or you don't want to get out at 10%, then that's the wrong reason to do it.
But, hopefully it turns around here and starts moving up above that trend line. That's probably the best thing to look out for at the moment.
Sorry, Derek, don't have much good news for you. Wish I could tell you that it's going to go up and you're going to be fine, but I'm probably going to be, you're probably going to be exiting this stock at a loss, which is just a learning experience anyway. So, but keep up trying. That's what I like to do. Keep trying and keep analysing and keep making assumptions and doing some work on it, because you will get some winners anyway. But moving on, we get into tonight's topic is all about the best technology stocks with the potential to make significant gains in 2024. Now, the best idea is only good if you do something about it. So if we share something that grabs you or mention a stock that looks good to you, then we advise you to do something, and that means to get prepared ahead of time to make money in 2024.
Right, now, that's right. I have to agree with you, don't I? And there are lots of opportunities coming up. If you have patience, week after week on this show, we will bring opportunities and ideas to you. Your job is to grab those, make your own assessment and run with them.
Well, they also need to have the right knowledge, Janine. If you possess both the right knowledge and patience, you'll identify the best trades months out from when they trigger.
I am so glad that you said that. And that brings me to our quote for tonight, which is about patience. And it is from Benjamin Franklin, who once said, "He that can have patience can have what he will." It's all about he.
Does he mean
what
everything? I'm patient with my wife and I don't always get what I want.
Well, look, I think it's just a waiting game in the stock market, isn't it? And about being patient and not jumping in too early.
It is in the stock market. The stock market will teach you patience, if nothing. It'll teach you patience.
That's right.
And that's what I talk when I'm teaching traders, is saying the one thing the stock market's going to do is teach you how to be patient. And if you're not patient, you'll learn pretty quickly. So there you go.
That's good advice.
All right, but correct me if I'm wrong, Janine, but the point we're trying to make here is that the best time to prepare is when the stocks are pulling back. So it's not about attempting to find the best trade today, it's about finding the best trade weeks or months in advance and waiting for the trigger, as this yields the best results. Now, those with the knowledge and skill know this. The exciting thing to me is that some of these tech stocks can make great gains in a matter of months.
Yes, totally correct. With some knowledge and a little know-how to apply it, you can be ready well ahead of the best rises or races, a bit like picking the winner of the Melbourne Cup. So did you have a bet?
Yeah, right. I don't bet on horses. I was asleep, I reckon.
Right. Well, some people think betting on the stock market is no different.
Well, then they'd be wrong, wouldn't they, Janine, as they have little or no idea about the stock market. How about we get into some stocks instead of talking about that?
Good idea. Well, look, we have the best tech stocks to cover, and what I'm excited about is that this sector has the potential for double-digit growth. Before we take a look at the charts, let's look at this. On your screen right now is some interesting information about the tech sector.
This is a really nice graph, isn't it?
So this is the S&P.
So you got this off the ASX website?
Yeah, so this is the S&P ASX All Technology Index, XTX by numbers. Now we can see there that this is the pretty little thing that I like, this little slide here. It's showing 1 to 10, so there's 10 of the top ones there, which are the ones that people probably want to pay most of the attention to.
I wouldn't go outside of those top 10 pretty much most of the time.
No, they're the big ones. And what it's saying here is that there's actually 20 big ones, and this is the market cap for those, 195 billion
so the top
plus
20?
Total market cap, 425 million plus average daily value traded.
That's pretty good.
I mean, one of the things I like about what the ASX do is they have these great little summaries like this that you can just collect. You can print them off and put them into a little booklet and keep them there, and then just rotate them every so often. You might need to just check to see whether the stocks are the same. But, you know, we've got some interesting information here. We can see 27 information technology stocks in the GICS sector. The GICS sector represented in the index. We're seeing here there's 4 areas here.
Transaction payment processing services.
Yep.
4 in interactive media and services. 2 in data processing and I think it's outsourced services.
Yep.
It's getting smaller, this text. And 2 in healthcare and technology.
Yeah, so that makes up that 10. So that's a nice mix of different stocks in those different areas.
Add up, that's 12 actually.
Is it? Okay, so where's the other 2?
I don't know.
Okay. Look, now at the bottom we can see here we've got a mix of different stocks from different countries as well. So the XTX, this is the index as a whole, so not just the XIJ, but the index itself. The inclusion requirements for that are 120 million minimum,
for the market cap, yep.
30% minimum relative liquidity ratio, 250k minimum daily value traded, 30% million free float, and a quarterly rebalance happens to adjust those, but they're the different countries of origin. Most of those obviously are from Australia.
Well, 30 from Australia, and I like that. But you know what, Janine, I find with a lot of people, beginners, when I say to them, have you ever been to the ASX website to look at some of this stuff? And most of them go, I've never been to the ASX website ever. And I thought,
really?
If you want to understand the stock market, you just go to the stock exchange.
It's an interesting place, isn't it?
Yeah, we're always there looking at stuff, but beginners tend to go everywhere else but the right places.
Well, that's true.
Yeah.
Well, look, okay, now it's time for us to look at the tech sector and how it's shaping up. So let's get into the charts.
Okay, oh, sorry, I meant to click on the next bit.
All right, there. As you can see, we've got the different sectors there. So
this is over the year, is it?
Yeah, so why this is really interesting is because the tech sector, the information technology sector in Australia is actually up 20% at the moment, and we'll show you a chart of that shortly. But if you compare that to all other sectors, nothing comes close. And we know that, as we said, this sector can often provide double-digit growth in many years in a decade. So it's worth actually keeping a close eye on. Consumer discretionary is coming close in there, but really this is because things like materials are really down at the moment. Typical growth areas are also healthcare, which is down at the moment. So normally we'd be saying, take a look at the top three, or, the bottom 3 or 4, which goes from energy to healthcare. But I would not disregard infotech as well over the next year or so. I'd be really wanting to keep an eye on that one and we'll show you why shortly.
Okay. I'm
So should we have it?
I'm going to leave it with you.
Yeah, so let's have a look at what has happened on the tech sector. We've seen this recent pullback from the high around 49%, so that's a 50% fall. But what I want to show you also is we've seen a 20% fall just recently. Often when markets fall 20 to 30%, there's a reversal.
There's a reversal.
It's had about 18.6% growth for the year, but obviously that's been re-rated up today because it's moved up a little bit since I put the information on this chart. But I just quickly wanted to show you what happens year on year here. So this, the rise over these 2 years was over 113%. Okay, so that's what can typically happen after a fall. About 100%, and that occurred over 1, 2, 3, 4 years, which is a really nice little return, especially when you think about how long it takes property to double. You just got to look at the stock market. If you looked at this whole period, you would just do an interesting comparison. So 130% from this low here to the high before it had the next dip down. So this was the high before COVID. So that was a really nice run. And the mind boggles if we think about where we could draw the next one. So that off the bottom of COVID, it was a 200% gain. And so if we had a gain of over 100%, we'd be heading back through that all-time high. So how long it's going to take to get there? Typically, if you look at the history, there's only generally 1 year down before it turns around and goes back up, and we're 1 year down, as that was last year.
But can I say you probably need to be quite selective because
definitely.
It's a very thin sector.
It is.
In terms of liquidity and everything else, because if you look at our overall market, the tech sector is only a couple of % of our whole market.
Yes.
So therefore, and there's only a few stocks
well, see,
at the top.
Look, I think we've always talked about that, but when you actually go back and look at the stocks that are in that tech sector, like we showed them, there's some really good stocks.
Correct. That's what I'm saying. Is you'd stick to those. Stocks.
And you might only need to hold 4 or 5 of those, or 3 or 4 of those, to really make a difference to your portfolio, because they're the ones that are going to create that.
That's what I was getting at.
Alpha,
you're saying you don't need to look at all of the stocks in the sector, because these figures you're showing on the chart are all driven by those stocks that you had on the All Ords chart. All Ords.
Yeah, the biggest ones.
Yeah, that's what it's happening anyway.
Yeah, so just quickly, thank you. Just quickly, I wanted to show what's happening with the NASDAQ 100 technology sector. So by comparison, we've seen, remember, a 20% fall in our
this is the US
tech.
technology?
Yeah.
Yep.
The US tech's only fallen 13%. We've seen that reversal bar. Now, it could be a false trigger. I'll just expand this up a bit so you can see that on the weekly. Last week's bar might be a false trigger, so don't assume that just because we see this sort of a reversal that it's going to rise and continue to go. But it could be the low, so that's what we've got to keep an eye on. Looking bigger picture, if we come and have a look at what this sector has done over the long term, you can see some incredible gains, and this was driving the US market. So if this continues to go and comes back and finds support, then we could see it take out the all-time high like we think is possible for our market. But the risk right now is that we could see further downside, and that's what we've got to prepare for, because I wouldn't be surprised, especially on our information technology sector, if we actually see it fall back a little bit before it actually gets going again. So a bit more, because we've got this question mark over interest rates, what's that going to do is that going to put a dampener on this sector? We just have to wait and see, really. Wait for the market's reaction.
Well, there's a lot of bad economic news in the US that I'm hearing at the moment, a lot. And a lot around borrowings, a lot around the banks, a lot around their economy.
And Apple had 4 consecutive quarters, I thought it was, of declining returns. But I know they've got a new iPhone, I think, coming out soon, isn't it? In
they have a new
Christmas.
iPhone coming out every year.
And apparently it's got some great features. That's what they say every year.
That's what they say every year.
So I think there was one year where it really fell flat, didn't it?
I've still got my iPhone from 5 years ago.
Right.
There's no, to me, I go, why? You just I don't need a new camera.
Yeah.
If you know what I mean. And so to me, I think they used to get big bumps every time they bought a new iPhone out, but there's not so much.
So you're
anymore.
saying there were big technology steps, but not so much in terms of a big technology leap forward.
Yeah, it's new technology coming out, more exciting. Maybe AI, may have something else is probably going to have the bigger growth.
Yeah, okay.
Now, but hey, anything's possible. But at the moment, if you've got an economy that's not going anywhere, then people are probably buying less tech.
Good point.
So that could be an issue there anyway.
All right, now that we've explained the sector, it's now time to take a look at the stocks. So shall we go and jump in and have a look at the stocks?
Absolutely, I've been waiting for this for 5 minutes.
All right, now the first 5 that we're going to have a look at, we're going to have a look at some more after the break. Yeah. The first 5 we're having a look at, we've got Pro Medicus in there. It was a different one. I just thought that looked interesting and I've thrown that in there as well. REA Group, I'll just put these in order of their growth. So Pro Medicus, obviously market cap, it's one of the smaller ones. It's sort of in line with Seek, and that's 51% up, but even still, that's a huge. REA Group, 38%, Car, 38%, WiseTech Global, 23%, Seek is only 5%. So this is one where there could be an opportunity at the right time. We just have to keep an eye on that. But some of these ones that are still sort of holding up may turn around and go back up, but you've just got to be mindful there could be a little bit of downside before that happens. So WiseTech, we've seen a decent fall on this one. I'll just quickly have a look at that monthly chart.
So I actually quite like this stock.
Yeah, I know, so do I. I like just the look of this long-term rise that we've got here. It looks really nice. It's come back to the angle of that rise, which is nice. So, and also it's spent a lot of time here at this level around $60. I'd like to see a push back up towards 80. And we just have a look at how far it's fallen recently from this high. So more than the sector, so 34.4% down. So more volatile, obviously, than the sector. But then it's had a stellar run over time. I'd just wait now that we've seen this decline, we just need to wait for a rule to get into it and just wait for that support to be confirmed, and then we could see a nice opportunity going forward.
That could be an opportunity in the next few weeks, probably. The next month, maybe-ish.
Okay.
I'd say.
All right, great.
Not definitely saying it's going to be, but it could be.
Okay, so that might be your preferred stock, is it?
It's possible. It's on the list as 1 of 5.
Okay, yeah, well, there's got to be one in there, doesn't it? Okay, so if we're looking at this one, this is a little bit different simply because we've seen a lot of...
So this is Seek.
Yeah, we've seen this really getting stuck around this level here.
Around $23, right?
Yeah,
24?
is it 24? Around $24, and it's just really struggling to get through. So I'd say if it doesn't make it through on this next run, we're more likely to see it push down first. Personally, I'd rather see that happen and then get a nice trend line in there for the recovery. But if it starts to move back up, there's a real probability of it getting up to around $30, possibly $32 as part of that rise, and there could be a nice little opportunity there to get a short-term trade out of it at least. So that's Seek. Now, Carsales, this has been far stronger than you would expect, wouldn't you? I mean, just look at it. It's just rolled through that high, but, would you have picked that it was going to make that? Let's have a look at that week there. It had just done nothing. It had just gone sideways all this time, threatening to fall. This week here, it actually reversed. That was the week of 23rd of June and looked like it was going to start moving away. And then nothing, closes all around the same level, no real commitment to a rise, and then bang, all the gains pretty much were made in 1 week.
Well, they were, aren't they? And it's going sideways.
Yep, and now it's going sideways. So look, it could break out of that and keep trundling higher. There's a possibility of that. But I'd just be watching. If it takes out this low, I'd just let it fall away. Don't try to get in it at a cheaper price or anything. Let it unfold, and then once it sort of bases out, it may even come back to find support off this sideways move if it does fall away. and then you get a better opportunity going up. But if it takes out that high and keeps running, I mean, it could do so and end up somewhere closer to $33, $34 if it takes out that high.
So how are cars? I mean, this is carsales.com, so obviously looking at carsales.com is where you advertise second-hand vehicles and people are buying those, whether dealers are putting ads on there or whether it's consumers.
So it sort of seems to make you think that the second-hand car market is doing much better than the new car market.
Well, I know with the new car market, I was reading statistics the other day between internal combustion engines and electric vehicles. There's this like a 9-week supply of ICE vehicles for the combustion engines. But like for electric vehicles, it's like 9 months. If they stop making them today, there's still 9 months supply because less people are buying them.
Okay.
It's not being the take-up that they expected. So the manufacturers are making a lot. But it's also, you've got to look at, well, what's the price of the new vehicles as opposed to buying a second-hand one. And with the economy the way it is, interest rates the way they are,
I think
if your car's broken, you need
to
get a new one. It's not like you have a choice. You need to eat. And if you need a car to get to work and it's broken, you have to get a new one. It's not like you can, well, you could catch the bus, I suppose. But not always the ideal for some people, is it? If you've got kids and your car's broken down, you need to do something. So it's almost one of those essential things that you need, and so you'd go to car sales, wouldn't you?
Yeah, it's interesting. I mean, if you look at it, if it repeats what it's done in the past, could we see a repeat of these sort of rises potentially?
I think you could.
Yeah,
I think you could, because I think the price of used cars is starting to come back down again now, because it was pretty high there for a while.
And the good thing about these sort of trades is that, you know, the stop loss can be relatively tight, be nice and close in underneath all of that. So if we're looking at a move above that high there, so if it takes off through there, it's a 10%. 10%. You just have to take my word for it. There you go. 10% stop.
10%. Okay.
So look, let's move on to the next one. We've got REA Group. Now REA Group, I really like the angle of this trend going high. Now let's just have a look at this. So it's like we showed the chart on the All Ords. If we're just looking at what's happening through the rise, and then have a look at what's happening underneath all of that, it's really nice, strong support underneath the angle of that line coming up through here. It's also quite good. So I think that even if it does fall back to that level, I think that's a really nice point for it to take off again. But it just looks like it's holding up so well at the moment, and if it takes out that high there, high probability it'll take out the all-time high and keep going. So let's run a trend line up underneath that rise there, and we can see there is just beautifully following the angle of that line. Isn't it? Yeah, but when else has it really gone up at that sort of rate? I mean, potentially back here in 2013.
Well, just grab the trend line and do it.
Copy it across and show them?
No, I'll show you. I'm going to teach you something, girl.
You want to copy it?
No, you don't. No, just let your hand off the mouse and I'll do it.
All right.
You just like to control it, don't you?
That's fine. You go for it.
You just run your pointer over it and you just grab it and you just move it. You can say there.
Yeah, I was trying to do that, but I just couldn't get it.
But here it was a bit shallower, so it ran up for a few months in this sort of area through here. That one's a lot shallower, so it's quite steep.
So that's what I'm trying to say, that because of that steepness of the current run, does that mean then that it might be due to come back to the angle of that line more before the next move up? But either way, this is a stock that's really good for short to medium term and medium to long term growth.
Yeah, it could be. I mean, the thing is that's where we don't know at the moment, because obviously if you look here, whilst that's the all-time high there, the open and close is right down the bottom. So if, we've got more like a lot of resistance sort of at that level through there, roughly where it hit, or pretty close to where it hit.
Yeah, so you can understand that reversing where it did because of that. But now we're just seeing a challenge of that resistance line again. So if it starts to move up and breaks through that high, then you know that more than likely that's broken and it's going to keep going.
Correct. So, but can it keep up that momentum? That's what we're talking about.
That's what we're talking about. Yeah. So I think we'll need to wait another couple of weeks and then see, because how quickly, I guess, will this respond to the interest rate announcement? That's what we're going to see.
All right. So on the weekly chart, what are we seeing on the weekly chart? Because that is
bullish.
The monthly.
It looks bullish. Look at the reversal last week. Really strong reversal there. But it may come back. Yeah, I know. So it might be market driven, but it may come back into the range of that half of the previous week. I'd like to see if it does do that first before it starts to move on.
Again, a bit of indecision all the way through there. You can see that's a very indecisive bar, same with that one. And then so far, this is only 2 days. That's yesterday and today in here, so you can't
Too early.
really make a decision on that one. But I really would want to see it to get right through that sort of high there at 166.99.
But it's not unusual for it to unfold like this, because look at the way that it did that really strong dive down into this low, reversed up, gave the market the impression it was going to take off, and then reversed down again before, it's just all over the place. So I wouldn't be surprised if we get that sort of indecision happening over the next couple of weeks.
All right, so you're saying this one...
I was saying it's got to be for the watch list.
Got to be for the watch list.
Just be patient.
So if we go and whack on, let's say the green thing around, the green line around here, so if it gets up around through here...
A strong close above that.
Close above that should be a nice little buy signal.
Should be on its way.
Yep.
All right, so PME, Pro Medicus. Now that's been so strong. Just look at but I think it's due for a bit of a pullback now, although, this month's bar's not telling us that. So last month I saw this and I thought, okay, so it had been up for 5 months. Surely it's coming back for a breather. But then if you go back in history, you can see that it runs up for often 12 months at a time before it has 8 to 12 months at a time. So it's only done 1, 2, 3, 4, 5, 6. It still could go up for another couple of months before it makes that high if this month closes strongly. But we're only early days in the month yet. We'll just have to wait and see whether it holds up. But if we go back to the weekly chart now, we have a look at that. It just looks really nice in the short term. There's a potential trailing stop loss underneath that low. So if we put it there, it's about 12.5%. So that may be more than what some people are comfortable with, but it's pretty normal between that 10 and 15% that we look for. And a move above that high could signal that it's going to keep going. Ideally, if you had been watching this back here, this would have been a better, once it had gone through all that previous resistance back here from 2021, that probably would have been a good place to look for it. Then you would have had a nice run, but that's all good in hindsight. We can learn from that though, because once it has another consolidation down the track, then more conservative people might choose to wait for that.
It is, but if you're looking at this, let me get rid of that, and we get rid of this. Oh, maybe I can click on it. If you whack a trend line underneath it, this is looking quite nice, isn't it, in terms of just trailing up here. It's looking beautiful through here, and it's just accelerated a little bit through here. So it's looking quite nice at the moment in terms of following the trend. But if we go back to the monthly chart, I know one thing we talk about a lot of times is the angle of these trends. If you're using a trend line and you're saying, here there's one angle there, and it gets steeper.
Yeah.
Then it gets steeper. Well, that was a bad place to put it, wasn't it? It gets steeper, and then it gets steeper again. So what I often say to people, and people have been watching long enough will know that I talk about this, but you've got 1, 2, 3, 4 times. Once you've got into that fourth one, it's searching for its peak. But I've never seen more than 5 pivots. And so this is on its fourth, so it will be, doesn't mean it's going to run out of speed. It just means if they're looking at trading this stock, don't look at it for long term.
Yeah.
It's looking at, and it could be another 6 months or more, what you're talking about. But once you've got that fourth one, it's searching for a peak, especially if it's more vertical. If it was a bit more shallower, you might get a fifth one.
Yep.
But quite often you'll see 2 or 3. You won't see 4 and 5.
But look, I mean, this is a good stock to have on your watch list, because when it is the right time, then it can give you some great runs.
Look, I totally agree with you, and I think it's looking really, really nice. I don't mind what you're showing me here on that weekly chart through there. It looks pretty good. Volume's probably a little bit down on what it was back through 2022, but that's not a big concern. It's still pretty consistent. I do like it. I think it's great.
Well, that's it for our topic tonight. We've still got lots more stock to get through. But before we get into these, for those watching on YouTube, you can watch all of tonight's show, plus the bonus content that includes lots more stocks and questions. You can do this by simply taking a couple of minutes to secure your free 7-day subscription to talkingwealth.com. You also get to watch Dale's weekly Australian stock market report, where he shares his view on the market, where opportunities may arise. It is now time to pick up your phone and give us a call on 039 290 9988. That's 039 290 9988, or you can text the number on your screen. Whilst we wait for your call, let's get into our next email.
Now it's time we get into our next email question, which is from James, who says, "Hi team, sending in my email as the show is on whilst negotiating with my 2 young ones to sleep." Well, that'll be a tough thing to do. About to enrol in the diploma of share trading, having completed the short course in share trading, which was great. I bought DMP on the 17th of July 2023 on a swing entry. Initial stop loss set using trend lines for trailing stop loss. 2 weekly closes below the upward trend line. The question is, what are your thoughts on DMP for the short to medium term? Also, more broadly, I have backtested a number of stocks, but have found this year's reporting season to be much more volatile for a number of stocks. For example, WiseTech and ResMed. Keen to get your thoughts on whether the market seems to be more erratic than we've seen over the past 5 to 10 years, and if something has changed that is more AI pushing prices around at a faster pace. Keep up the great work, James.
Yep, OK's hit some good points there. First, obviously he's done the course, and congratulations to you, James. But great stock choice, really like your pick. Looking for something that's potentially bottomed out and coming off those lows. But what about his question about AI before we go to the chart?
Well, I think this year's reporting season has been more volatile than in past, but I think that's
healthcare sector's had a big decline.
Yes. Yeah,
so, is that normal? Well, not necessarily for the healthcare sector, but it's sort of, every sector's going to have its decline eventually.
I think AI, I think high frequency trading and AI and all of those algorithms having much more.
Oh, it's changed our market.
But not necessarily just reporting season. I think with the reporting season this year, it's a product of the economy as well. I think there's not a lot of faith in the economy, both here and in the US and overseas. I think there's still the lag over from COVID as well. I think if the economy was better, we wouldn't have seen the issues we've seen on the reporting season this year. So that's my take. But 20 years ago, we didn't have all this high frequency algorithmic trading, all that sort of stuff, and we didn't get as much volatility. But it doesn't mean people can't trade and make a lot of money. It's not. You just have to be better with your rules and much more stricter with following your rules all the time.
Yeah, I just think that there's just so much going on behind the scenes that the individual has to be more skilled these days. You really need to be. It's not like it was before, and I think he's just really hit the nail on the head about the AI trading, because you and I looked at that from 87 onwards. We proved in one of our shows how the market had changed when all of that really started to take off in its early days, and I think COVID is sort of a really classic example of that coming through.
Oh, yeah.
And it just really frustrates me to see stocks in the same sectors being grouped like they are, because AI is controlling all of that. And we saw Worley break out of the energy sector because basically it was being treated like an energy stock. So, but I think we just have to be really savvy about all that and understand what's happening.
Now the stock
Dominoes. What can I say? I like it. I don't think I need to say anymore.
Well, yeah, you do.
Short and sweet.
What is it? He's talking medium to long term. What do you think of the stock?
Yep, I like that. Medium to long term, and just make sure you set a good stop loss because it can be volatile.
Geez, you're not even going to bring it up. For you not to bring up a chart, that's strange.
Well, I can if you like.
Well, he was asking,
Have we got
but
time?
Anyway. Well, let's get on to the next email.
Okay.
Now remember, if you do want to chat to us, you can call in now on 0392909988, or if you're a bit shy, you can email us at info@wealthwithin.com.au. Next, we have a question from Anthony, and Anthony says, "Hello, Dale and Janine. After its recent fall out of bed after earnings results, I was hoping you might be able to take a look at core lithium, as it has been difficult trying to decide if the price has found support yet or is likely to continue dropping. Your thoughts here are much appreciated. Many thanks as usual. Kind regards, Anthony." So let's have a look at that.
Another interesting stock choice. Well done, Anthony. Yes, I like this one. I mean, it's gone down and it could fall a little bit further. That's the risk with it. But there's a potential right now. It's trying to find support. Just remember, Anthony, anything that's trading below $1 is going to be really in that higher risk basket. So you just have to be mindful of that. But at the moment, it's way too early to tell. I think looking at it, you couldn't even get a trend line down there. You can get one on there, but it's miles away from where the stock currently is. So I would say that it's not worth trying to get in early. I'd be waiting to see that the stock actually prove that it's actually going to go up.
Yeah, I think lithium's one of those sectors that had more talk than anything else, but it's underperformed.
That's right.
So there's going to be a time where it's going to go.
Exactly.
But it doesn't look like it at the moment.
I don't think. I think it's just a little bit too early, but I think great stock choice for the watch list. Keep it there and just make sure you've got a good set of rules for it, and just make sure you've got a good stop loss as well.
All good points, Janine. Now we have a text from Diane who's saying, "Hi, Dale and Janine. Would you please be able to have a look at MAD? I don't mean look angry, but look at Mader Group. It is in its infancy, but keeps improving with each financial report released and kicking goals. Would like your thoughts. Cheers, Diane."
Oh, what a
Diane's
good stock
a bit
choice.
of a joker, isn't she?
This is, yeah.
Don't look angry.
This is cute. This is 3 from 3, I think, in terms of stock choices here for the watch list. So let's just have a look at the angle of that rise, and it's just taken off from that one and accelerated away. But
I like that.
it does look nice, doesn't it? It's recently had a strong pullback in price, but
Down
you
from
know, if it
$8
recovers
down
from
to
that,
low fives.
yeah, I think if we can just expand the weekly chart a little bit and just have a look at what's happening with the volume, because I think that's going to be important. There's this whole period here where it really went sideways and didn't do a lot.
Period earlier,
yeah, 2022, that is through there where the volume's quite low. And then more recently we've seen volume rising into the high and then coming out of the high into the selling period there. But volume's still staying high. So I would definitely say that this is a really good one to keep an eye on. But there's no rule to buy just yet. It's a bit too early.
No, but if you're looking at this, it's if I put use our little trend line up underneath this, you can see how it had this really nice angle. Perfect nice little angle, and it's just moved up a little bit from there to be more trailing. I don't mind this actually. I mean, it's not a trend line, I'm not suggesting it is, but I think this looks quite strong. Really, really nice. It didn't break through there, but I think if it pops back a little bit and then starts to move up, I'd like that. I really would. I think I like it.
Great stock choice and not mad at all.
It's not mad at all, and Diane's not mad for looking at it either.
That's so true. Now, before we get into our next question, remember to hit that like button and show your support for our channel by clicking subscribe. Now, our next question is from Igor. Hi team, I just started listening to your show on YouTube and thoroughly enjoy it. Keep up the good work. I would like your thoughts on Perpetual. I identified $20 as support. It broke below and closed last week back above $20. I've placed a trade now with the view to stop on weekly close below $20 again. Take profit at around $25. Am I on the right track? I'd love to hear you analyse my trade setup on your show. I'm a novice in trading and mostly self-taught. Thanks, Igor. So Perpetual, yeah. What do you think of that? It's kept falling and it's gone through that major low there. It's gone through a long-term low. I'm not a fan right now.
I think his whole strategy is flawed.
Yeah.
And I understand it. I mean, he didn't have to tell me he was beginner and self-taught, because I would have picked that up by his strategy. Because a lot of people use that strategy finding support, and then when a stock hits support, they go and buy it, and then they go and buy it, then they set a profit stop. And both of those things I would very much encourage you not to do, Igor. Because at the end of the day, I remember, I'm not sure I've ever told you this story, but I was at a traders group type of thing presenting, and one guy that had done 5 different courses, and he started asking me about our course, and I said, if you can't get it right with 5 courses, don't do ours. Right. Because it's not the courses that are the problem, it's him that's the problem. And I think he got it, but I'm not sure. But he asked me a question in the room. He goes, well, what about, buying, for support line? And I said, every man, woman, dog and child knows about support and resistance. So why would that be a buy signal? And as fund managers, they know it. Yep. And so if fund managers know it, can they move the price? And he went, yeah. And I said, so what does that tell you? So you and me never, ever, ever take a buy signal off a support or resistance line. Never. It's in our thinking about a confluence of rules around, but we don't take
signals
of it.
Trying to reduce your risk.
Because what you'll see, Igor, is sometimes you'll see if a support level, sometimes it'll hit the support level or go below it and then come back up to it again. And a resistance level, it might pop its head through and come back down into it again, because the market does push it a little bit to get people to place the trades. And so it's basically a sucker's place to start entering trades. And again, if a stock's going up, don't set a profit stop on, because I'd wonder how you picked $25. You don't just pick figures out of the air about where you might enter and exit. They're actually based on rules and strategies. So I'd suggest you buy my book, actually.
Just giving him a little bit of a
If
pointer.
he rang up, we would have given him my book.
Yeah, I know. Well, we could have talked through it a little bit more. But just looking at the support underneath here, look, it is a long-term support level. So, I mean, he's got that in his favour.
But that doesn't mean it's going to hold.
Look, it came down to this level in March 2020, obviously with COVID, and then came back here in March 2023. So it really needs to make a strong boost in the right direction right now. Like, you know.
He might get it right. It might be right, but I don't think it's good trading.
So look, I mean, the low here, what's the low? 1870?
1870.
Okay, so it took out, what's the low here? Is it 1922?
1922.
1903. So it's taken out that's a long-term low, and it's taken out that as well. So look, sometimes stocks can reverse on those long-term lows, trade a little bit below it, dip below, and then come back up and recover. But a lot of the time we've seen, it's just our experience that we're trying to counsel you with, is that we've seen stocks continue to fall. So, you know, and trying to get a trend line down there, you know, you're not going to get one that's right down near the low either. And getting some rules to work. Let's just have a look at the weekly chart just to see how that goes. And the interesting thing is that this is sort of an interesting point to try to draw from, and you can see it's pretty hard trying to get a trend line down there, and it's miles.
Yeah, we're not trying to discourage you. And because you're a new person watching this channel, you know, Janine and I know BS. We're just going to tell you straight what we think, and we're both probably trying to tell you in a nice way. We don't think your trading strategy is very good. And whilst you may get out of this trade and make exactly what you said and get out at $25 and make a profit, it's not a good trade in our book, even though you've made profit, because we don't think your rules are solid. That's what we're trying to say here.
Yeah, so it's just probably, you know, just a little bit more knowledge along the way could help you just to work out what sort of rules.
It's a high risk
can
trade.
Get you there. Yeah, it is.
It's a very high risk trade.
All right, then looks like we've got a text, Dale, and this is from our buddy Yes, who's got URW. Yes, we hope you're doing well. We're thinking of you. Hi guys, could you please check out URW? There isn't much data, but I really like this pattern. Would love to hear your thoughts. Regards, Yes. Wow, geez, you pick some good ones, don't you? Nothing stops you, you know, you're just amazing.
Interesting pattern, isn't it?
It is an interesting pattern. Now,
I'm assuming he's meaning this.
Yeah, for the last few months, it's just gone sideways. So you're just talking about that sideways consolidation.
Well, maybe he's talking about that sort of pattern there. I don't know.
Do you want to try the weekly chart and see if there's something on there?
Well, there probably is. So, okay, there you go. There's nothing on the weekly chart.
So you can see it more clearly on the weekly, what you're trying to draw.
You can?
Yeah.
You draw it then.
Okay.
It's okay.
So, I mean, it's more a trend. You know, when you look at it on the weekly chart, you can see it's more, you're talking about a downtrend. But if you're just drawing this here and he's trying to put these on here, then there's something in there, and it's just broken out above that, all of that stuff.
I think it's going to come back into it.
It looks more likely it will. So that's the thing. And sometimes these patterns, when they're not really tight consolidations, often, you know, it's just a false trigger. So, you know, more like these sort of consolidations tend to be the ones that break you out, but it's just gone sideways for so long, hasn't it?
Yeah, look, I think what you're going to see is it'll probably come back to around about that line there, round about in that sort of, at a guess, somewhere around about 380-ish, because you'll see that sometimes when you get a pattern like that, it'll break out and it'll come back to about halfway along that pattern, which is roughly where that line is, and then turn around again, because it's not really giving me any. Whilst it had a big week last week, this week's been a gap right up and turned around, so it wouldn't surprise me if it came right down to here. But I'd wait for a better breakout. But hey, Yes is always thinking of great things, isn't he?
He's always on to good stocks.
I'm amazed at how he picked everything up from the course and how fast he's running with everything, so that's pretty good.
It's fantastic.
He's pretty impressive.
Well, make sure you contact us again. Yes, we always look forward to hearing from you. Now, that's all we have on URW. We hope you enjoyed our show on YouTube. And remember to show your support for us by commenting below this video after the show, because we'd love to hear your favourite part, and also give us a big thumbs up, please. It helps new people discover these videos. And we would appreciate it if you show your support and subscribe to our channel. That helps you, as you will know when we go live. Now, for those watching via Talking Wealth, stay tuned for the bonus content we promised.
In next week's show, we get into the Santa Rally and pick our best stocks. Will lithium stocks be the ones to recover? We'll also answer your questions and so much more, so make sure you put next Tuesday night show on your calendar. Also, give us a big thumbs up and subscribe to the channel. As always, thank you for joining us. Goodbye, good luck and good trading.